Alrighty, what is up, you guys? Thank you so much for checking in for another video. This video is pretty much going to focus on charts. We're going to talk about some of the hottest stocks on the market right now. All these chart requests were from the hyper chat community, and a lot of them are covering very good stocks. So I'm excited to go over some of these stocks and we'll talk a little bit about the companies and how the market is doing overall and what we can expect from these companies in specific. So the first company that we're going to talk about is going to be Apple. Obviously, this is a big one now that earnings are coming up for them. The iPhone 12 was a big deal because of the 5G technology. T-Mobile and other carriers are reporting that they are doing extremely well selling this phone and 5G technology. So we can expect a big earnings from Apple because at this point they have been hanging around below 140 for quite some time. So if we do get that big earnings from Apple, we're going to see them take off into a whole new range that we haven't seen since the split. So it's very exciting that earnings are coming up. We don't know that they are going to post solid earnings. We don't know that the stock is going to go up yet, but Apple typically doesn't disappoint. This isn't, a buy the stock, signal. This is just a personal observation from what I've seen from Apple before. We can perhaps expect them to beat earnings, and if they do so, we're going to see them take over that double top that was created at 138 back in December and when the stock split in September. So that's kind of just the overview of the chart. Let's go ahead and dive deep to see what's going on within the actual micro picture. So if we go into the 30-minute candles and we zoom out a little bit, we can see that the stock has made what looks to be a double or triple bottom right after they started pulling back from the double top that they hit at 138. So you can see that the stock had fallen back along with the rest of the market. So a lot of stocks did fall back at the time in which Apple fell, and we can see that it's primarily maintaining the 128 support, sometimes coming down to the 126 support depending on how bad the market downturn is. But overall, the stock is not in terrible condition. You can see that the stock has been kind of fluidly moving for quite some time. When it comes to stocks that have ran up as much as Apple did in 2020 after the market crash, you guys have to remember that they're not going to be as easy to take over to the next level, especially after a split. So now that there are, I believe Apple split 5-1. Now that there are 5 times as many shares out there, it's going to be even harder. It's going to take even more volume and more buying power for the stock to move into new ranges without some kind of strong catalyst, which will usually come from earnings or a big announcement by the company. So what are we looking at for the rest of this week before their earnings come up? We really need Apple to break that 132 level. I love that the fact that they went up today. I liked their big bounce from the 128 support. However, they are still not fully within recovery. Yes, they have that double bottom, but I would like to see them enter the range above 132 for me to fully call it a safe position to enter, if entering at all. I mean, when it comes to earnings coming up in less than 2 weeks, you got to ask yourself, is this really worth my efforts? Is it really worth my money, or should I just wait for that earnings to go through and then I can go into Apple and see what kind of position that I can take from there. So overall, long term, Apple, it's obvious that Apple is a great company. They have plenty of cash flow for them to survive pretty much anything, and they are a very innovative company, so they're going to do just fine. The first attempt at the breakout of the all-time high came a little bit too strong. You can see that the stock moved a little too vertically to get to that point. We really it's really a good thing that they pulled back, because they're likely going to circle back around eventually and test that 138 for a better breakout towards 160. So overall, looking good, but still need more development for them to make that all-time high. The next chart on our that we got requested is going to be Mara, and Mara is Marathon Patent Group. One thing to remember and keep in mind about Mara is 100% dictated by Bitcoin's movements. At least right now it is, because they are, at the end of the day, a Bitcoin mining company. In fact, Mara only focuses on Bitcoin and no other cryptocurrencies. So Bitcoin's movement is going to be very vital to the stock's overall health. So before we dive into the micro picture, let's see what's happening in the macro picture. So anybody holding Mara or anybody looking to buy Mara, you should not be surprised whatsoever that the stock has pulled back from their $28 high, because looking back into their history, we can see that the stock has actually made a pretty strong exponential move since probably less than 2 months ago. You can see that back in December, Mara was only $5, and then it reached a high of $28 now in January. Therefore, the stock was riding a little too high for its own good. You can see the RSI was overbought, and the stock was in desperate need of a pullback. And so, as this vertical move kept on going vertically and everybody kept jumping on, it was getting more and more high risk with every day that it climbed up that the stock was going to experience that strong pullback, and it came right around the same time that Bitcoin pulled back as well. Overall, however, you can see that Mara is still way above its 10-day and 20-day moving averages. So it still has a very bullish sentiment to it. However, when it started trading up here, it was just trading, it was becoming a little too far away from that 10-day moving average, and it needed to correct itself back down to a healthy level. When a stock is moving way too far high up against that moving average, you're going to want to wait for it to correct itself, or you should expect it to correct itself, in which in this case it did so perfectly. But you can see that the volume is primarily leaning bullish. We don't see a lot of bearish volume from Mara, a lot of bullish volume every single day the stock is getting bought up. So there's a lot of money flowing into Mara. Let's see what it's doing a little bit on the micro picture. That way we can figure out how to trade the stock and where the proper levels are. So first, we want to point out that Mara did go up in post market. So Mara actually went up to around $24 so far. Markets are still open. Actually, no, I'm sorry, markets are closed. So it did go up in post market, so that's a good thing. Let's see where it reached. So it reached a high of $24.25 in post market. At least on TradingView it did. I know TradingView can be a little bit out of whack sometimes. So $24.25 is the resistance on Mara, since that's the resistance it made in pre-market and post-market. And then the next resistance is going to be at $25, and your supports are going to be at $23. So what is happening with Mara from here? Since the stock had tried to come back, and since the stock bounced at 21 multiple times, we can see that the stock is holding 21, and we can safely say that that's our strongest support. So if you are in the stock and you are resilient and you want to hold it because you think they're going to do well, you can make $21 your very next support. And then after that, you can use that 10-day moving average that we pointed out on the daily chart. What do we need to see Mara do from here? So from here, we need Mara to really break above this channel down pattern. So if you want to look at the overview of the stock right now is something like this. The stock is still kind of trending down from their highs, so maybe we can expect them to come back down to 22 tomorrow and then bouncing up to break out of that channel down pattern. That's going to be the best bet, unless Bitcoin takes off, and then what would happen is you'd probably expect Mara to do something along this line where it gaps up tomorrow, comes down just slightly, and then takes off to test the next resistance, which would be at $28. So a lot can happen overnight with Bitcoin because Bitcoin doesn't stop moving, obviously. So Mara is really going to be dependent, or where it opens is going to be dependent on that Bitcoin opening price. The next one we're going to cover is NIO, and we're going to go a little bit faster here. So NIO, there's really no need to introduce this stock. We all know what NIO does. The company is pulling back from a very strong move, which was very expected. The stock almost reached $70 before pulling back. You can see that it's still way above that 10-day moving average. There was a lot of profit taking when the stock gapped up to $68, but it still managed to close pretty high. So a lot of the buyers that took it up to that price are still interested in that price. Looking at the micro picture, we can see that the stock is perfectly healthy. It's consolidating in a bullish pennant pattern, so it could be getting ready to make another upside move. And we know that when NIO catches traction, it really takes off. What do we need to see from the stock tomorrow? We really need the stock back above $64. If the stock is able to at least prove that it can break above that $64, I think it will put a lot of traders at ease, and they'll be able, and a lot of them will start buying more into that position, knowing that the stock is able to get off from that $62 support in which it's been trading at for the last 2 days, which is kind of frustrating. So traders want to see that break above 64 and then eventually move towards 68 to 70. Space. So Space is one that ran after hours, and I believe it's due to ARK Investments deciding to create a space ETF. So it's not specific to space, but obviously any news that involves the sector, especially from ARK Investments, is going to be very influential on the market. So let's see what the stock's daily candle was doing. So the daily candle is here, but the post market took the stock up to $31. So the stock is actually up in post market. So we actually need to go in a little bit. So you can see that the stock is up and it filled in this gap perfectly. So that's exactly what we always talk about, that stocks fill in gaps typically. So the stock gapped up in post market and filled in the gap down that it made back on December 14th. So it's a nice sight to see a stock fill in the gap perfectly. What can we expect from here? The stock is moving on a catalyst that really doesn't have much to do with it. Yes, obviously, a space ETF from a huge investment company like ARK Investments is going to be influential. However, the news wasn't space or Virgin Galactic specific. Therefore, this stock may not hold this after hour position, and we shouldn't assume that it will. We need at this point to wait for the stock to open tomorrow and figure out where it's going to open, how it's going to react, if it's going to keep the same volume. So from here, since the stock closed at 31, you're going to put a resistance at 32 because that's where the stock's next resistance is, and you can expect the stock to likely pull back from that 31 tomorrow back down towards the 29 before consolidating for some time and eventually coming around to test that $32 price point for a breakout. And it should look something like this, where the stock opens high and then it comes back down and it pulls up. And if it is going to break out, it will take some time consolidating and eventually moving towards $34 price target. So $34 price target on space if it does indeed come around to break that 32. The next stock is going to be Upwork. Absolutely love what Upwork does. I think these guys are going to do great long term by every mean. I do think that they are going to keep going towards that $100 price target. What is happening with them currently, though? So market conditions weren't the best today. Therefore, stocks that had that potential didn't end up going. In fact, they ended up pulling back, most of them. So what is happening with Upwork? Let's look back into Upwork and see what's happening. We can see that Upwork initially took off after they had a strong earnings, and earnings was obviously fueled by COVID and people working from home. So Upwork has been running since. Strong earnings can hugely impact the stock's future, and we can see that it did so with Upwork as it is still running. The main resistance that we're seeing on Upwork, and this was created by the high of today, is going to be $44. So we want to place a resistance point at $44. Although it pulled back, the stock still managed to close pretty high up in comparison to yesterday's and the previous day's performance. So we're not too worried that the stock lost a whole bunch of buyers today. It's still considered pretty high up, and volume was not as strong as the buying volume yesterday. So overall, the stock is still doing okay. Let's go ahead and see what it's doing in the micro picture. So the hourly candles look like it found support at the 10-day moving average. That is the 20-day moving average, I'm sorry. So the stock dropped below the 10-day moving average, but managed to find support at that 20-day moving average. So that should be your primary focus for support tomorrow. However, it doesn't mean that the stock is completely gone if it breaks below that 10-day moving average. You still have supports at $40 and you have support at $38.50. So you still have two more supports that you can use for this specific stock. However, it really depends on your own risk tolerance if you are willing to hold the stock on lower supports and if you believe that the stock will turn around. Personally, I do believe that Upwork will turn around and it will eventually test that 44 for a $50 price target. So these guys are going to do just fine in my humble opinion, but I've given you some supports for you to use for your own personal risk. So the next stock we're going to talk about is going to be ARBKF. So Argo Blockchain is actually a stock that was brought to our attention in our group right in the beginning. So I found the stock around 30 cents. I was doing some research and we found out that the stock actually is the only blockchain company traded on the London exchange, and it's actually traded on the American OTC exchange as of actually December. So it's a fairly young company to our markets. However, we all know the hype around blockchain right now. Everybody's raving about Bitcoin, and we're seeing companies like Riot, Mara, CLSK, they are all taking off from Bitcoin's move, and these guys being so young and so cheap may have a huge upside to them being one of the only companies that are involved with blockchain on the London exchange. So there's definitely a lot of upside potential, and we can see that upside potential had already started for them. How are they doing overall? We can see that the stock is actually moving very fluidly. There's no forced movement. This breakout came around with a lot of accumulating volume, broke out, managed to find that support at that breakout point when it pulled back, and has came back up, and it's forming a very nice pennant pattern. Overall, the stock is doing well. We can expect them to keep moving up as long as blockchain is performing well, and we can expect them to come around and test that $2 resistance. So we really need them to come around and test $2 for a breakout to their next price target. We have an optimistic price target for these guys of $5 for the first profit taking point, but I do think that they can do a lot better over a long period. It just takes a lot of patience for this one to work because they are fairly a young company and they are only traded on the OTC markets. That means they're not available on apps like Webull or Robinhood, which really takes away a lot of volume from these guys. So they have a ton of potential, but the fact that they're not on those two apps is actually slowing their move down, in my humble opinion. The next stock request we have is going to be Zoom. So Zoom, how are they doing and what can we expect from here? So let's go ahead and take a look at their daily chart. So we can see that Zoom has been coming down for quite some time because the $600 valuation that it gained at one point was just absolutely ridiculous, due to the fact that, in my humble opinion, Zoom is not going to be a very good long-term investment. Short-term, medium-term, perhaps, while COVID is still very much kicking, Zoom is going to be great. They're going to keep making money. They're going to keep gaining subscribers. However, as soon as COVID starts to roll out and vaccines become more effective and less people are getting are having to be homeschooled or go to work from home, Zoom will start to find a balance at a very much lower price, in my humble opinion. However, let's take a look at what the chart is doing right now. So COVID is still very much going on. So Zoom may still find buyers that take it higher and bring it back towards that 600 while that's happening. What is happening over the last 2 days? We can see that the stock had actually had a pretty strong 2 days as it bounced from a low of $332. So overall, the stock is seeing some action at this low. There was a bullish engulfing on the daily chart yesterday. Today, it tried to run over that 20-day and the 10-day moving average. However, it failed to hold over the 20 and it closed above the 10. So tomorrow, your primary focus is going to be for a breakout above that 10-day moving average on the daily chart. And you also want the stock to break above the high of day, which is going to be at $384. So you want to watch the stock for a breakout above the high of day at 384. If it can manage to break out of 384, then we can expect the stock to move towards the next resistance of 396 before hitting that $400 mark. Remember that Zoom, if you are looking to trade it, you're not catching a breakout play. You're catching a reversal play. And reversals are a lot choppier than breakouts are because people have to be convinced that the stock is starting to see enough buyers for them to buy it back up above significant resistance points like $400. So reversal plays are always going to be a little bit more choppy than breakout plays would be. The next stock on our watch list is going to be Walmart. So let's see what Walmart is up to on the daily chart. So first of all, we want to point out that there is a very clear reversal doji candle right over here that should have kind of given you a sign that there would be a pullback today. So notice how the stock had came into a wedge up pattern over the last few days. It gapped up yesterday. However, during the day, it couldn't hold the highs and it closed right at their opening price and they formed this doji candle followed by this breakdown to the bottom side. Not too bad of a breakdown. They didn't lose too much traction, but it's definitely stronger than some buyers would like to see. Let's see what's happening with the stock on the micro picture and if we can see what's coming for them next. So right away, we want to put a resistance at 150. That's going to be the strongest resistance that exists on this chart so far. And your support point is going to be right at $147. So you have a support at 147 and you have a resistance at 150. You also have another support at $145. So the reason why I put another support on this stock is because of the selling volume that it went through today. Because of the selling volume being strong, perhaps putting one support at 147 may not be enough. The stock could drop further to 145, but it technically can drop to 143 and still be considered in a bullish, healthy direction. The reason why is because the stock came all the way down and formed that double bottom at 143. Therefore, we know that that's its strongest support, but it made a few supports in between. So the stock can technically come down and still find consolidation above 143 and come back up to test 150. It may find consolidation above 147. It may find consolidation above 145. But the bottom line is the stock can come down to 143 and still be considered in a healthy position, because that's where we know our strongest support point is, from that double bottom that it had created. The next chart request that we have is going to be FSLY, or FSLY. So let's see what's happening with these guys. So FSLY has really struggled to make back that gap down that they experienced back in October. And that's probably because for investors to really be convinced of a company, they need to see strong guidance. And when they gapped down in October, the company had lowered their guidance for the next year. So that's really not a good sign for a company, and investors do not like to see that, especially on a company that's ran up an insane amount, and it needed a correction at that point because the valuation just didn't make sense with the price. What are they doing? So right now they're actually not doing much. It's not a company that I would really take any position in. Notice how, the doji that we just pointed out on Walmart happened again with FSLY. So it happened here as well. So we may see another pullback from them tomorrow, back to the lower side before they test that 92.50 resistance again. So 92.50 is a resistance, but really the primary resistance to focus on here is the 20-day moving average. As long as the stock is trading below it, it's going to be a hard one to trust. I personally would wait for the stock to go above that 92.50 and above that 20-day moving average before entry on them, and then you can turn that into a support and trade it off from there. The micro picture is wanting to break out, but it's coming in a little too hot, so it may come back down for another fluid pattern to the upside. You don't want to see a stock kind of spike into a breakout. You want to see them fluidly go into a breakout to eventually move, and it can likely move to 97.50 if it can break 92.50 from here. Anyways, you guys, thank you so much for checking in. I know the video ran a little bit longer than I expected, but there's a lot of good information from here. If you guys want to see more, subscribe to the channel. If you like what you see, please like the video. Thank you so much. Bye-bye.